So what's up everybody, Aloma Bagi here, and this is yet another video, and I hope you've been having a great week. This weekend has been interesting for me because a lot of data has just dropped, and I think you'll be very interested to hear what the banks have to say about this data, and then, we can deliberate, we can discuss on how to interpret it, and then figure out what the next steps are. I'd love to hear your thoughts, so listen, watch this video until the end, but listen up. You walk into your favorite financial institution, right? Initially, they told you, listen, for you to access any sort of credit facility, you need to do what? You need to show us you have some inflows and outflows. So channel your money through us. Maybe your mshahara goes through us, Maybe your side hustle, you have a business account, you have your KRA pin, you open a business account, payments go through the bank, you're leaving a paper trail, okay? Building this relationship with your bank, favorite financial institution, and then you walk up to them one day, you have this dream project. And it's been 6 months, it's been 1 year, it's been 2 years, 3 years, 4 years, 5 years. Sometimes they tell you we need 5 years. 5 years of you, steady income, so that we can trust you with big money, so you have dreams and ambitions. Because you're fresh out of college and you're like, in the next 5 years, I'll be able to walk in, then they'll give me cash flow to fund my dreams, start my side hustle, or just get by, buy something, buy some assets, buy some land here and there, right? And you felt like the bank was asking you for a lot at this point in time. They're asking for birth certificates, death certificates, friend certificates, other certificates, high school, university, college, everything certificates. They're asking for your friends, guarantor, guarantor, next of kin, all that jazz, right? And you're just like, why? For what? For them to only in the end tell you that, listen, kijana, uko na title deed, uko na logbook. And you're like, boss, mimi ni kijana mdogo hii Nairobi, nimeanza tu juzi, ndo nataka kuanza biashara sasa, natoa pi title deed na logbook. Anyway, let's get into the juice. Let's get into why this matters to us and why you should pay attention to this. So the data we're looking at is that big banks, Equity Bank, NCBA, and the rest are holding over 1.75 trillion shillings worth of land and property as collateral for loans. So there is an over-reliance of Kenyan banks on land as collateral, right? Which has significant impact on this practice, because on individuals who lack these assets, these tangible assets, vijana wadogo kama wewe na mimi, it suggests that we cannot access any monies to grow our businesses, right? So you walk into your bank, your face card is right, you're vibing with the relationship manager. However, in the end, bado anakuambia, hey, cheki, tunahitaji kitu tangible, tunahitaji kitu tunaona, we need something physical. And you're like, what do you mean? But I've been banking with you for all these years. Where's the trust? I thought we were building a relationship. So news just dropped that the big banks like Equity Bank and NCBA, big names, right? Big names, have a big over-reliance on land and property as collateral, and they're holding 1.75 trillion shillings worth of land and property as collateral for the loans. That is crazy. Yes, 1.75 trillion shillings as of June 21st, 2025. Wild. One of the big banks, Equity, being, I think, one of the biggest in the country, has crossed the 1 trillion shilling mark for the first time ever in history. This is history being made right here. Okay, and you've had it here first. That's like 82% of all their collaterals. 82%. Equity Bank with a big market cap. 82% of its collaterals. So think about it. So when you take a loan, especially a big one, the reason why they're taking loans, I don't know. Why they're taking land for loans is, just security. It's business, right? Give or take. I give you this, you give me that, and then I hold on to this in case you can't pay me that, right? So, so when you take the loan, especially a big loan, they need some security, and banks need a backup, right? So that's why they tell you secured loans, because unsecured loans, bros, tunacheza double-digit interest rates, and we just cannot manage. That's a bit crazy. 19-20% sometimes interest rates, exclusive of other things, lawyer fees, stamp duty, that can easily take it to 20, 21, 22% is just not tangible, right? It's not doable, especially for small businesses. SMEs like us, it's a bit wild. So then they need a tangible asset to give us a secured loan. So this is just a backup plan. Backup in case you're not able to pay. Because, business is business. Failing in business is not failing, it's just learning. And we know that for every successful business, there are like 20,000 others that failed, right? So you'll take a loan with your bank. It's not guaranteed that your business will be successful. So there is room for failure. And in case of that room for failure, then there needs to be a backup plan, which is what? The security. However, now we are stuck in this stone age where the security has to be a tangible asset, a car, household goods, people using couches. I bought this couch at Furniture Palace for 500K. Can I use it as a security? I bought this bed, 6x6, queen size, king size, with a mattress that massages my body and heats up and cools down at the same damn time, right? I've slept in one of those beds. Crazy stuff. Mattress yenyewe ni 500,000 Kenya shillings. But I want to use it as a security. Can I do that? People do that as well. Cars as well. Property as well. But most commonly in Kenya, land and property is the one that is the most used, most widely used. 82% of all collaterals are land, 12% are buildings, 3% is machinery. And machinery, you would have thought that, listen, me, I run a digital business. Digital products are my thing. I sit in my house. I don't have a physical location, I sit in my house. I do design work. I do graphic design. I do artworks. I create videos and Instagram reels and TikTok videos for my clients. They pay me to do that on a weekly, monthly basis. So I have some income. These are the proof of statements. These are the invoices. Okay, KRA, right? So that's exactly what I do. I take that money as a business expense. I buy, I build my own PC, custom PC for 250K, 300K. Can I use that PC as collateral to get a facilitation for 5? No, you can't. You're just like, boss, what? Isn't that machinery? No. I want to talk machinery industrial area. Things that produce things that produce things.
We are not a sweatshop, thankfully.
So machinery 3%, vehicles 2%, and another 1% is other things, other smaller things, but a big portion of what they usually take and what they usually ask for most commonly in Kenya is land or property. So it's basically a promise. If you don't pay, take it, okay? It happens. So then why should we care? Why should we as the young people care? Because we are the leaders of tomorrow. As you can see there, we have some of our top creators. This is data from 2019, 100 most influential Kenyans in the lifestyle category, right? We have some really, really great talents out here. Now you'd find these people here are not able to use their IP. Let's look at Njugush. He's one of my favorite comedians. Shout out to him. I've seen him go from where he started to where he is right now. A legend, a goat, the goat. Look at DJ Shiti as well. All his memes are online. That's his IP. That's his trademark. That's his thing. That's him. That's his face. That's his image and likeness going out there. Ads could also be placed on some of these, are being placed on these social media platforms. Why can't Shiti use some of that IP, some of that trademark to go and get facilitation? Why? Just because people are backward. But what do I know? I'm just, So why should we care? We should care because, is that Eric Omondi? Don't get me started. Now, why should we care? We should care because this shows that banks are super focused on tangible stuff, just physically tangible things they can see. That's literally what that person told me. Vitu tunaona. Kama kuna duka hapo taona, zile ni nini, machine tunaona. Hiyo ndo tunataka. Ndio tukikuja tunakudandia hapo kwa hiyo shop. Tunaifunga,
They even took my repo vans.
So things you can touch and see. So if you're an artist, a content creator, a tech genius, you have the next best amazing fintech app. You're using AI. AI now is about to change the landscape. Everyone's using AI to better their product offering, streamline their processes, deliver better products, get more clients. But now, you're just someone with a massive skill set or massive following, right? But don't have any land. You have no titles, you have no logbooks. Well, guess what? You are definitely being locked out of the traditional loan game. You can't get money at good interest rates to continue fostering your skills, continue growing your business, continue being an entrepreneur, which is very, very frustrating. Now, this just isn't about big business, right? It's not just about that. It's just not about big business loans. This is a mindset that needs to change. It's a mindset that trickles down. It means that if your family also doesn't own any land or you haven't bought any assets yet, getting that capital to start or grow your dream in any way is harder, with all caps, harder through traditional banks. So now you have to find other ways, right? Maybe for people in finance, listen, me, I'm a guy who's a bit in the creative side, but I'm also in finance. Maybe I have some USDT. I might have some stablecoin. In fact, guys, if you're a crypto guy, stablecoins are about to go crazier. I have a video that's coming up this week, so hit the notification bell down below. Like, subscribe on the page, because I'll be doing these videos immediately the news comes out. But listen, stablecoins are about to go crazy. Legislation on US dollar-backed stablecoins is out, has been passed, and that is a big one. So the economy. The second one is one of the biggest critics of Bitcoin and cryptocurrencies for a very long time has finally amevuka mpaka. Amevuka mpaka has come over to this side and is like, listen, I now understand Bitcoin, and I do understand that we can have stable coins backed or pegged on something, pegged on fiat, right? So it can be pegged on the USD. However, now he's like, because he's been a gold enthusiast for a very long time, he's for the idea of having gold-backed stable coins. So XAUT, Tether, hey, is very interesting, and I think there's another one as well. Those two things, I think if they become, they're still very niche, but if they become true reflections of what gold is, true preservers of value, true safe havens, because they are pegged off the price of gold, boss. Anyway, that's a story for another day. However, you see those guys in the first world, they're very quick in understanding the nuances of the changing landscape. How do we increase security-backed lending or access to finance, and how do we pivot? How do we make that grow? How do we keep it growing? Because now people can be using their USDT portfolio or holdings to go now to the lender and actually get physical fiat. Use that as a security. How can we do that? Maybe I have some Bitcoin, maybe I have some Ethereum, maybe I have something in my wallet. Can I use that as a security to go get financing, do some other business, come back and reinvest, and then pay back my loans? Why can't we think that way? It blows my mind. But anyway, it's for us to have these discussions, and I'm glad that people are having it as well. We'll see some reactions on Twitter on what people had to say, because damn, we need a change. We need a change. It's like borrowing a PlayStation. I don't know, guys. I don't know. This slide, truth be told, I'll just skip over it, because let's keep this video short. Let's cut to the chase. What needs to happen is that banks need to catch up. That's why we should care, because if we have massive skills, we have good IP, we're geniuses, we're content creators, we are musicians. I've been in the music business for almost a decade now, and I've seen how artists are making royalties. Artists are making bangers. Artists have videos and video views on YouTube, millions of views on YouTube, millions of views on TikTok, monetizing all that, but can't use that as a security, can't use their IP, can't use their albums, can't use their creative genius as collateral. It blows my mind. So things like those, so they're not really looking for, they're not really looking at our cash flows, is what they're basically saying. They're not looking at our patents, they're not looking at your trademarks. What they're basically looking at, basically the brilliant ideas and the digital assets that power our next generation are being ignored. And that needs to end, that needs to stop. So the banks need to catch up, because the times are shifting. The shift towards a digital and service-based economy is here, and posing the question of whether banks in Kenya should adopt to modern forms of collateral beyond traditional land ownership is important. So we should encourage a critical examination. I'm happy to look out and seek out guys, recommend guys down here who have been in the banking sector for a very long time that we can have this discussion with, so that they can give us more insight on what the changing landscape looks like, and how can we work together to improve these financial solutions. Okay, so it pushes a lot of us towards alternative lenders, which are very expensive. 19-20% interest rates are not it. That's not how you grow an economy, or keeps us also from even starting, because then I'm like, nikichukua ka 500k hapa na wananiitisha, hey bro, wananiitisha 20% in 12 months. Guy, how am I supposed to survive? 3 months already is just to set up the business. Another 3 months to try and market and get customers. See, the year is over. Now they wanakuja kunidandia. Wachana na sisi. Please, banks, stop thinking. Stop this small shop kiosk mentality. You guys are big banks, you're big players. Come on. Okay? Come on. So imagine all the amazing ideas that never get off the ground, because it's very difficult to do business or get money, get financing in this country. It's very frustrating. So again, I would love to hear your thoughts. I'm not saying that this is it, but it's very interesting that this data just came out very recently, and we should start thinking about it critically, okay? So I want to hear your thoughts. Let's see what a few people said on Twitter. People on Twitter, I think, Equity Group Holding, Let's see, Brian was saying that Kenya banks aren't just lenders, they're some of the biggest landowners by default. Whew, crazy. So the real estate bubble has new landlords. Interesting. So the banks, Jolo says banks are exposed. So some of these lands are overpriced. And again, the real estate bubble may just burst in their faces. I don't know about that because a lot of FDI is still coming into the market. So maybe that will balance out the equation. I don't know. I also believe some of the land may not be properly acquired by the owners. I mean, that's up to due diligence. A disaster is what Chase Matic was reacted that right there. How when the loan book is slightly over a billion, or how when the loan book is slightly over a billion. Food for thought. That's how much Kenyans are living on loans, hard times. Then those who will be unable to pay, auction. Massive job losses, businesses closed down, and inability to pay back those loans. Overcome evil with God. I mean, a lot of reactions coming from Kenyans, all the way down here. So people are saying it's a big problem, and others are saying that it is what it is, right? It could be a means to an end where unapeleka nini yako, then you just bounce. You leave with the hard-earned cash and do other things, right? I have an interesting story. I might just do a video on it one day of guys who actually bought property, took out a loan, 10 billion almost to be exact, built a hotel, took that hotel, resold it, played some gymnastics, and then used that hotel as collateral to the bank, and then just walked away with a clean 10 billion shilling. I mean, game is game, right? So what do you think about it? Leave a comment down below. Let me know what you think. If you know how many zeros 1.75 trillion Kenya shillings is, I think also please leave it down in the comments below. Should banks start recognizing our killer app ideas, our killer trademarks, some of our talents as well, your online strong business cash flow statements as well, or the IP and intellectual property as collateral? I saw a guy, Juicy, was driving down Kilimani, and he had a board or a placard written, I'm trying to raise money to start my music career. Guy could be brilliant, in his own right. Could be talented in his own right. He just cannot afford studio time. So is land the only way to go? Also let me know down below, because in the comment section is where we do a lot of this interacting. If you haven't joined my Telegram community, do that. Follow me on TikTok as well. If you're into the financial markets, because I am investing in the financial markets actively, which is why I do these videos for you guys, just so that you are in the know and we can grow together, because the next couple of years, the next decade especially, a lot of money is there to be made. And the financial industry is also exploding as well. So join my Telegram community. I do a lot of day trading and swing trading as well. So I do have some educational courses. If you're very interested in them, I'll leave the links down below. If you've learned something new in this video, smash that like button. Share this with a friend who's struggling to get a loan. Share this with a creative friend. Share this with someone who's trying to scale their business or grow a business, but is finding it difficult to access any sort of financing. Also, follow me for real talk on money and the economy each and every day. Stay savvy, stay sharp, stay informed. Peace out. See you in the next video. Cheers.
Bye.